Hello everybody and welcome to the next session in today's programme. I'm joined by Martin Griffiths, the Senior Credit Analyst, and Alaistair Maidment, Team Manager, who both work in the risk function at Lloyds Banking Group. And they'll be exploring getting mortgage processing right first time. In their presentation, they'll look at the process from an underwriting perspective, and they'll use examples from the buy-to-let application process, so that you can understand what you can do to ensure that the mortgage submissions process is as easy and as frictionless as possible. Hopefully they'll be speaking for about 20 to 25 minutes, and then this will be followed by the question and answer session. You're perhaps now familiar with this process of submitting questions, so please fire your questions through on the web chat that you can see the box underneath the video screen as they occur to you, and I'll put them to our speakers after the session. But first of all, I'll just load the presentation and hand over to Martin and Alaistair, who will take you through their tips and advice on the mortgage application submissions process.
Good morning all, hope you can hear me. My name is Alaistair Maidment. Myself and Martin can take you through the session as Ian kindly introduced. Just a quick go through of the agenda today. So we're obviously looking at buy-to-let, portfolio journey, bit about documentation, some delays in processing, some basic principles of underwriting, hopefully some interesting tips about strengthening the case, finance costs, cash flows, and then obviously how we sort of assess cash flows, and then sort of the last one really before your questions is sort of common challenges to underwriting. So hopefully there'll be some useful tips you take away in that. So yeah, first one to talk about is who are we? So obviously we're the underwriters in the BM brand. I'm actually in our lending excellence area, manager in there. So I sort of assist and train up our underwriters on how to underwrite, look at lending policy and things to that regard to sort of support a better quality of underwriting. And then obviously Martin is involved in our change function. So again, he's involved in lots of projects, hopefully to make the journey smoother for all ends of the process. So underwriting itself is a specialised department. We obviously look at all types of mortgage applications. We obviously look to put the customer at the heart of our journey. We are here to lend. We actually, do try and progress applications and make them work rather than say no. So if you can move on to the next slide, please, Ian, that'd be lovely. Okay, so we want to take you through the portfolio landlord journey, how it works. Obviously, hopefully you can see on the screen, so I'm not going to go through every word line by line, but obviously what happens is we just wanted to show you where we fitted into a particular journey on this one. So the application is submitted by the broker, as you can see. Then we have what you call a portfolio landlord support team. So they will review the application, review the documentation, and hopefully put it into a stage where it can come to underwriting, mortgage underwriting for decision. We will then fully assess the application. We will look at the documentation. We'll make sure everything's okay with that. We will sure the forms are suitable, and also just make sure it fits in with our lending policy. And obviously, if it doesn't, if it's a bit of a grey area, a kind of application, see what we can do and work with the broker and the packager to ensure that we can get it to work if possible, or if we have to say no, we obviously make that call to basically explain our decision in full. And then obviously, hopefully, we can get to the stage where we can actually offer the mortgage. So it could be a stage where we just get to a stage where we basically agree it's subject to evaluation. Obviously, once that's returned, then we can obviously progress that customer journey to offer. So next slide, please, Ian. Thank you. Okay, So what we're looking at now is portfolio landlord documentation. So this really is the key to the evidence. So we need to use key and evidence all sources of income. So that's really important. Obviously, that helps us build the picture of the customer, ensure we've got the full information to make a lending decision. And obviously that saves the back and forth with yourselves, asking for bits of more information, etc., etc. We like to try and make a decision on first touch. So again, obviously that hopefully doesn't delay the customer journey. Next part of the process we're looking at is the PL form. Key bits on this really is to make sure that obviously it's fully submitted with mortgages balances verified to the bureau. A lot of the time we take up is trying to match up what's on the bureau compared to what's on the PL form. It's a really key bit, because obviously that can impact our calculations, our decision making ability, and obviously the time it takes us to look at each application. So, you know, in reality, the longer it takes us to look at an application, the less customers we can service in a day. So obviously we could cause delays and backlogs for looking at your particular application. And then also the most key part of it is that without the first two steps, we will not get the case from our support team, so it will not be underwritten. So the delays in the first two bits, getting that right, that causes us issues to actually get the case and make a lending decision for you. So it's kind of really key just to do those couple of steps before it gets to us. Obviously, Martin's going to go into a bit more detail in a second about the whys and wherefores and a few tips, etc., etc. So I'll move the slide over and then hand over to Martin.
Thank you very much, Alaistair. So basically, on the back of a previous slide, I've just put together a couple of examples that can be common delays from the application moving from our portfolio landlord support team to underwriting. So key tips are proof of all sources of income, making sure again that the portfolio landlord form completed with mortgage balances matching the credit file. Instances where this doesn't happen, it's updated by our processing, our support team. It then falls outside policy. So obviously then it's given a negative decision, which had it been completed correctly up front, we would have been able to give a faster decision. Savings and investment assets, not detailed. Residential mortgage hasn't been keyed in the commitment screen of the application. If a mortgage is held for a buy-to-let in a limited company name, we would need mortgage statements to evidence the balance, as it won't show on the personal bureau. If there's any recently completed mortgages that aren't yet on the credit file, would need mortgage offers. And then just an explanation of anything that may not be clear on the portfolio landlord form. I suppose a good example of this would be if a lender puts the main mortgage as one entry on the credit file, but then further advances go separately. So there's a section in the form that gives the brokers the opportunity just to provide any kind of explanations as to why some of the balances may not match. It could be the mortgages are split into two. Some lenders do that, put their different sub-accounts into different mortgages on the credit file. So ultimately it looks like they're more than there actually are. So there is a section on the form that specifically highlights where any key things that we need to know from an underwriting point of view when validating the form. Okay, next slide, please. So in terms of underwriting, it's the role of an underwriter to fully underwrite the case. We have gone from the stage from a buy-to-let point of view that the rent stacks up isn't enough anymore. Days gone by, it would be a case of if a buy-to-let self-funds, that's fine, but obviously with regulation moving on since then, we do have to make more of a profile of a customer. So a couple of key considerations are personal savings. So we'd want to see if a customer's got contingency funds in the background in the event of a property becoming untenanted, or maintenance costs. Personal affordability is a key one we look into. We like to be satisfied that a customer's got the level of income that can service their residential mortgage, general living costs, utility bills, shopping, etc., without the reliance on rental income, which should be used to service a mortgage. Unsecured lending, we take consideration when we're looking at the bureau as to the level of credit cards, unsecured loans. Again, if customers got a high level of credit card, it does give concerns of a reliance on credit to maintain living costs, which obviously when we're looking to consider a mortgage, we need to be absolutely sure, the customer has the ability and the willingness to repay. High levels of unsecured lending does give concern about the financial states of affairs. Also, to take into consideration the length of time an applicant's been a landlord. If we can see the applicant's had a number of properties over, a number of years, that gives us a strong kind of steer that the customer is a strong landlord, knows what they're doing. With everything that's happened in the buy-to-let market lately, such as tax changes, it gives comfort if there's a long-term experience within the landlord that they're going to be in a position to understand tax changes and the impact it has on the overall profitability of a portfolio. Residential status is another one to consider. If highly mortgaged, high residential mortgage, this ties into personal affordability. Obviously, if mortgage free, then that does give, adds a positive factor for personal affordability. And just in terms of, this kind of goes in addition to the rent stacks up theory. Just because an application meets the RCR and loan to value requirements and minimum income to allow a portfolio landlord case to proceed, ultimately that's just to get the case through the door. That's just that the application's meeting policy, but we do have to take these other considerations into account. Next slide, please. So, a couple of things we could do for key strengths to a case. So, low debt to income ratio, strong equity within the portfolio. So it gives scope there if they need to restructure to sell one of their properties. If we've got that high level of equity, that can, financially boost them. There's a non-property income there again to support personal commitments rather than the reliance on rental. In terms of rental income, I suppose there will be circumstances where we would use it for personal affordability, in that a customer's a very experienced landlord with a high level of profit from UK land and property on top of a large contingency of savings. So if a property becomes untenanted, there's the high rental income on top of the fact they've got savings there. So that would be a circumstance where we would be agreeable to look to use rental income for personal affordability. We need that resilience within the portfolio as well, just to account for any interest rate increases. Obviously, as probably well known in the market now at the moment, with the base of Bank of England base rate increasing, this is more time than ever now to make sure that there's a resilience in the portfolio to handle this. Again, going back to my points about savings investments held as a strategy, as a contingency, that again builds up the case. Experienced landlord, but with the portfolio steadily built up, a concern we would have is rapid gearing, i.e. a customer buying about 6 buy-to-let properties within the space of 12 months, given there's no track record of them having these number of properties, and also no track record of profitability. And for UK land and property, income declared is to be reasonable to the expected profit. So, if we've got a high level of rental income, even when we take away like mortgage commitments, general costs within the portfolio, if it's a high level of gross rental income, we would expect to see that reflected in the UK land and property. Obviously, if that's not the case, that would be a concern, and that would lead us to do a bit more investigation by additional documentation. This could be by means of the SA 105, which gives a bit more of a higher level detail of the cost within the applicant's portfolio, and then could make us understand if there is a kind of discrepancy between high rental and low UK land and property. Okay, next slide, please. Finance costs is a big matter. This goes from previously what I've just said then in terms of the tax changes that came into the buy-to-let market a couple of years ago, in that it changed that a customer could offset their finance costs as part of the tax changes over the latest years. The amount that can be offset has reduced, and now there's completely nothing they can offset. They can claim a tax rate though at basic of 20%. The problem with this is when it comes to the tax calculations, the profit from UK land and property can look as an inflated figure. So the example we've got here is the profit from UK land and property is 24,087, but there's relief of finance costs of 13,138. So when it comes to working out the minimum required for a portfolio landlord, the finance relief would be deducted to give a more reflective view of actual profit from UK land and property, which in this instance, it would work out as 10,949. Appreciate this has been a bit of a complex matter over the years, and obviously it's one we try and communicate to a broker if we're on the call. If we're looking to decline, if income's falling below because of this factor, it is something we like to be as transparent as possible. If you look on our actual BM website, you can see now there's been a section updated within the portfolio landlord tab, which again gives detail to finance costs and how we treat it, just to ensure we're giving transparency throughout the application process. Next slide, please. The next item we'd look at when it comes to looking at a portfolio landlord is a cash flow. So following on from the PIRA regulations, when portfolio landlords are introduced, it's a requirement of a mortgage lender to have a review of the finance costs to see the resilience of the applicant's portfolio. So a couple of key things we'll look at is mortgage rate, interest rate stressed to accommodate any increases, which obviously you can in the market now. It's a very probable event. Letting agents' fees. If a property's managed, we need to have detail about the management agent's costs. Landlord funded repairs and maintenance. Other property expenses such as safety certificates, tax liability, rental void periods, building insurance, ground rent service charges for leasehold property. So these are a couple of key items that we do take into consideration when looking at the resilience, as I've just mentioned. Okay, next slide, please. So going on from the last slide, just a couple of points that will allow an underwriter to assess the cash flow. So insurance that the number of property owners on each buy-to-let property is correct, including whether a property could be held with a third party not named in the mortgage. This does drive the finances within the cash flow, especially from a tax point of view. Leasehold and managed properties are selected as such. On the portfolio landlord form, there is, when it comes to inputting the form, there is a tick box to ask whether or not the property is leasehold or managed. As I've mentioned in previous slides as well, there is that section within the form, additional information, which is again the opportunity to provide any kind of information that would support any discrepancies we might see. A perfect example would be if a property is we carry out right move AVMs. So a rent may come in lower, but a property is a HMO, which obviously achieves a higher rental rate. So having that information will then give an understanding if there's a high discrepancy between the declared rental income and the rental return from a right move AVM. Ensuring a VAST meets our lending policy, and checking for VAS on the STs that the rent's in line with the customer declared. Again, also whether it's managed by a letting agent, which should be reflected as part of the process when submitting the portfolio landlord form. Okay, next slide, please. So we'll move to common challenges now from an underwriter point of view. Application meets criteria with no supporting information. Again, the theory that the rent stacked up is no longer enough when it comes to underwriting an application. Income challenges. Income is keyed incorrectly. Not all sources are declared, or income that's keyed that's no longer received. For example, self-employed income could be input, but the business itself has stopped trading. With tenancy agreements, incorrect rent, out of date or in the incorrect format. residential, second or holiday homes not declared, additional applications in progress not mentioned on the portfolio landlord form, incorrect mortgages, rental values keyed, and also scheme abuse is one that we see, which is basically if an applicant holds a residential mortgage within the group, but it's been let out without our consent. That's something then we have to push back on to ensure that all our group mortgages are held on correct terms. So that really summarizes, and that's just a quick high-level summary of some of the challenge we see within underwriting. Okay, next slide, please. So that concludes the presentation. So we'll now move over to the Q&A.
Very insightful stuff. Really appreciate that. And that was great. I know, Alaistair, I think you had a few connectivity issues, so thank you for your perseverance in that as well. I'm just looking at the questions that are coming in. I think we've got time for a couple. Certainly, I'll kick things off. I mean, one thing that sort of was discussed in the session clearly about what administrators need to be doing in terms of submitting applications and the process you go through to make sure it's as frictionless as possible, but also clearly you have to do your due diligence to make sure that it is a case that you can lend against. So I guess it was sort of picked up early on where you commented that actually your role as underwriters, you are here to lend rather than just sort of put roadblocks in place. Can you kind of expand on that a bit just to sort of dispel any misnomers people may have about the role of an underwriter?
Yeah, can you hear me, Ian?
I can, yes.
Great stuff. Yeah, it's Alaistair here. Obviously, I would sort of, it's a great question. I would kind of sort of take it back a step. So as underwriters, we obviously do have to lend to protect the interests of the bank, but obviously we also have to think of the customer as well. So for example, if we say no to every single application as underwriters, we wouldn't be here as a department. But basically you'd have a credit score system that would either say yes or no. Everything that would say yes would go through. Everything would say no. We wouldn't be manually looked at. But obviously we look at the sort of grey areas of these things. The cases that might actually be no become ones that we'd want to look at. Now, as I said, our instruction, I work in Lending Excellence, so we give direction of credit policy for our underwriters is to, where possible, look to lend, rather than look at it as a point of view, as you said, to put a sort of a barrier or roadblock in the way. Now, when we ask for information, it's usually to try and assist lending rather than just ask you for a piece of information for the sake of asking for the piece of information. Obviously, all our underwriters do get checked from the quality of their decisions. My team takes part in that to make sure that we are lending to our sort of policies, but also showing that flexibility there as well, to ensure that we're trying to make applications work for the benefit of our brokers, customers, packages, and obviously within our lending policies. It's a bit of a balancing act, but we shouldn't be asking you guys for information to say no. We should be asking you guys for information to obviously try and do the deal, as it were. Now, we can't say yes to everything. Again, when you look at something with manual pair of eyes, sometimes it can be perception or opinion. But in theory, what we should do, we do pick up the phone just to speak to our brokers and our packages, is give you a full explanation as to if we're not going to do something as to why. Hopefully, gives you an understanding to relay that to the customer, or if not, please ask for a bit more further information on that phone call, and we'll endeavour to do that for you. But as I said, we wouldn't be here for very long if we did say no. We try and actually add to the process rather than take it away. I don't know if there's anything else you wanted to add to that, Martin.
Yeah, I mean, as a group, one of the group values is treating customers fairly. Now, although at a high level point of view, treating customers fairly by saying no, we're blocking them getting a mortgage. But sometimes on the flip side of that, by treating the customer fairly, saying no, we could be preventing the customer falling into arrears. So as Alaistair alluded to, we do a full risk-based assessment. We look at the finer detail when it comes to assessing an application. As Alaistair said, we wouldn't want to say no to each and every application, but although it may not seem it from a customer's point of view, by saying no, sometimes it is the right answer, because the last thing we'd want to do as a bank is put a customer in a position that a couple of years down the line, they're falling into arrears, they're having a house repossessed. So it's making sure that, we put the customer's interests at the heart of everything we do, making sure that we're making the right decision. We're not going to a philosophy where a computer says no. We are taking that time to get a full understanding of the case. If we need that further bit of information, just giving the brokers a quick bell, just so we can get a bit of an understanding of the case. So that would then, it can ultimately, an underwriter can look at the application, be a bit on the fence about where we're going. We have that conversation with a broker. The information is then given, and that gives us absolute clarity whether we do or don't want to proceed with the lending. So I think that's one thing we do endeavour as a function, is making sure we do take them steps to call the brokers to keep them updated, even if it's just sometimes a general update, whether we're unfortunately declining an application or whether we just need that discussion to get a better understanding of the customer so we can make the right lending decision.
Perfect. Thank you, gents. I mean, that's a great insight. And, from my perspective, I'd like to think that there is greater collaboration now across both sides. So hopefully that added communication will just help that process so that everybody sort of understands the requirements to get the business through, because ultimately that's what everybody wants to do. I can just see one sort of final question before we finish. I'm very conscious of time. And it's just sort of picking up on that list of common delays that you had in your presentation. I mean, if you... I guess could identify a couple of those that were priorities over the others. I'm sure they're all very important, but if you could just highlight a couple that the administrator community here could take away just to really think about in their work going forward.
Yeah, so certainly, I mean, one of the key ones is getting all the documentation to us, which includes if the form of income's been keyed, given all the valid income verification. For assistance on our group web, the BM website, we do offer a full list of acceptable income verification, the kind of things that we require on an application. I suppose another key one is when we're looking at portfolio landlords. So as I mentioned on the actual presentation, as part of the assessment, our support team and underwriters look at the bureau to validate the mortgage balances held on the bureau against the figures on the customer profile form. So I think the prudent approach to take when it comes to looking at a portfolio landlord is to get that copy of a customer's credit file. That way, at least you've got the credit file there to hand. You put in the information as per the credit file, which is what we'll see. The last thing we want is you've spent all that time filling the form and mortgage balances are incorrect. It lands on our desks only for us then to outright decline, because obviously portfolio landlords, more than anything else, are quite a time-consuming event, especially with the form, the income. So, I think it's just that the emphasis on having that quality, being absolutely sure the mortgage balances are correct, getting that copy of the credit file, going through it, having a discussion with the customer before submitting the application just to see any discrepancies against what's been declared. For example, a further advance might be held as a separate mortgage. Getting that absolutely right means we can make that faster decision rather than, making that horrible decision of having to push back, despite all, the work that might have gone into getting that far, providing documentation, etc. So one of the key things I would relay for a portfolio landlord, again, just get that credit file, make sure that all the balances there. If they've got holiday homes, main residentials, make sure that they're all keyed, because it does feed into our personal affordability. We need that profile of a customer. So Al, if you want to add anything to that.
No, I think you've summed it all up really well there, Martin. As I said, that extra couple of minutes at the packaging end can obviously save probably a lot more time at our end and expedite that customer journey, and reduce the amount of times we have to see an application, which it always helps, because obviously every time it comes to us, it's a slight delay in the journey, and obviously the smoother it goes through the system, the better. It's probably my final word on it.
Perfect. Thank you, gents. And a nice way to finish. I'm afraid we have run out of time, and in the interest of time, I will bring this session to a close. So hope you've enjoyed it. Thank you, of course, to both Martin and Alaistair, and those people that kindly submitted questions. The next session we've got is at 12 o'clock, which covers how you as administrators can harness technology to increase efficiencies and hopefully improve the customer experience. For that, we've got Neil Wyatt, who's the Sales and Marketing Director of Mortgage Brain, and he will sort of take you through what technologies exist to help that process at the moment, and critically, what's coming down the track. But for now, thanks again for Martin and to Alaistair, and goodbye.